We're speaking right now with Jimmy Lee of Strategic Wealth Associates, a firm that has about $1 billion under management. He joins us from Las Vegas this morning. Jimmy, welcome to InBusiness. How much cash do you tell your clients they should have right now?
Well, it really depends on who the client is. I think it depends on their personal objectives and circumstances. But for most people, at least 6 months to a year of expenses.
So what, for the average portfolio that you manage for an individual client, that's what, 20%, 15% of what they have under management?
It's probably more like a 5 or 10% allocation.
Oh, so still fairly conservative there. Yet you're being defensive otherwise. You're telling clients that the safest havens are really dividend-paying stocks.
Well, we think that we're still in an environment with a lot of volatility. For every investor, they should have an investment policy that takes into consideration their individual goals and objectives. And with the volatility, we think that the places to be are, again, higher yielding equities. We've increased our allocation to fixed income in terms of REITs. And we're also looking for absolute return. So just making a positive return has become a premium.
What kind of fixed income are you recommending right now? You're not putting people into U.S. T-bills, are you?
No, we're not. We're recommending actually some alternative areas in the fixed income market. Like, for example, we're increasing allocations to floating rate bank loan funds. And we're potentially rising in interest rates will help those investors in that the principals will be, we think, protected from the collateral on those bonds.
So that's these days, it sounds like you are looking for more alternatives to equities than perhaps in the past?
We are. We think that we're still in a very volatile environment, and the cyclical bull market that started in March of 2009 through April of this year may have topped out. And with that, maybe the market might go sideways. So we're putting a premium on making positive returns and looking for higher yielding investments.
Do you count gold as one of those investments?
I don't really think so. I don't think you're going to get a yield from gold. But gold is potentially a good diversifier in someone's portfolio. And again, it's an alternative to currency these days. So we think that clients should have commodity investments and allocations, and gold might be one of them.
What's the average net worth of a client of yours right now? Are we talking about, $200,000, $250,000? Are we higher net worth?
Well, in our firm, we have clients of all different demographics, but our typical client typically has about $500,000 or more of investable assets.
So your clients would be those who would be directly impacted by the proposed changes that the president is looking at right now in terms of taxing or changing the tax-exempt status of municipal bonds as one way to help pay for this jobs plan. He's looking at a few other measures that would directly impact your clients. What are you advising them right now?
Well, I just read that headline today that in the job bill that they're talking about capping the tax-free interest that someone can get above a certain amount of income. I still think that municipal bonds will be attractive to many of our clients, but then again, once this is all shaken out, we'll compare the equivalent yields of taxable investments against the tax-frees and make the right decisions for them.
So you wouldn't move people out of munis, but you might reduce that exposure?
Yeah, I don't think so. I don't think it's prudent to make any rash decisions based on this proposed bill. Hasn't been passed yet, and I still think that depending on the type of municipal bonds that clients are holding, they're still going to be attractive for many investors.
All right, Jimmy, thanks for giving us your perspective today.